Gives me great pleasure now to welcome on board Ashwani Bhatia, the MD at SBI, in an exclusive conversation with us this morning on a variety of things, including, of course, his outlook going forward from here, asset quality post-moratorium, unlocking value in subsidiaries, and lots more. Mr. Bhatia, good morning and great to have you with us. You know, we want to first get a sense on really, how you're viewing things as you take over from Mr. Kumar, the perhaps the strengths and the challenges that you feel that you've inherited at this point, where you see the greatest value. Talk to us a little bit about how you're viewing things as you take over.
So I took over as the MD about a month back. Specifically, I think you wanted to know about the growth and also, how the moratorium book looks, or how, things are panning out currently. So the growth has been good so far this year. On the deposit side, we have grown more than we grew last year. Liquidity to that extent is ample. That's also reflected in the numbers that are going to the Reserve Bank of India on a daily basis. On the advances side, of course, there is a slowdown. The GDP fall was very sharp, and but we think that we should be growing in single digits during the full year FY21. So we should be growing, say, between 7 to 10% over there. The moratorium and so on, we are quite comfortable at the moment. There is nothing to worry about actually. And the corporate book has actually held up.
Sure. Okay, so that's an encouraging, picture and also commentary that's coming in from you as well. In terms of, required restructuring of loans, the moratorium now being gone, while you're saying there's no area for concern as such, if we were to break it up segment-wise or sector-wise, where do you still see some vulnerability, or where do you see more demand for these loans going forward?
So, I can only talk for State Bank of India. So our book is slightly different from the others. It's a very balanced book as far as the assets are concerned. And on the retail side, the Q1, the guidance that we gave was that stress could be there in about 10% of the loan book. I think we stand by those numbers. And on the corporate side, we haven't had many requests. And in any case, we are not there on the very stressed sectors like aviation or hospitality or real estate. So we think that we are fine at the moment.
Morning, Nikunj Dalmia also joining in. It's good to see you in a different avatar. I've always interacted with you in your SBI mutual fund capacity. Now I'm talking to the true blue banker, which you are at the heart. So let me talk to the banker, Ashwani Bhatia here. Banks or markets are, Mr. Bhatia, worried about what will happen to banks in terms of their disclosures, in terms of how they will calculate NPAs, how will restructuring happen. Each bank will follow a different methodology because the RBI restructuring guidelines has given the onus to the banks. What we are trying to understand from you is that for an investor, how should one judge?
So again, you can't deviate from the RBI circulars, right? So whether it is the circular that came after the recommendations of the Kamath committee or the June circular of last year. So, if at all there are some issues, there could be issues around the restructuring, whether it is going to be mild, moderate, severe. There also, I think we and all the banks are working with the IBA to come to a common platform. Work is also going on the drafting of the ICA. I'm sure things are not going to be as bad as, say, when the banks were asked to come out post AQR, and that's about 4 or 5 years back. I think all the banks have learnt their lessons. Capital buffers are there. Provision coverage ratios across the industry, to my mind, currently are quite good. In fact, for us, it's in excess of 85%. So this time round, I think banks are in a much better situation. And to the investors, I think there is little to worry as compared to the past. Say what happened in 2008, that was a market event, but this is of course pandemic, and we need to be a little worried. But I think as far as the SBI book is concerned, we are quite fine right now.
What if the second wave of coronavirus spreads itself? I mean, we have already seen that it is having an impact on businesses in Maharashtra. Things in South also are now looking quite challenging. When you speak to companies, they're saying we might have a labor problem. Some of them have supply chain problems. So as we speak right now, Mr. Bhatia, we have an assumption that things on the economy side, because of the pandemic, got hit. They will get better and they will normalize. But the second wave or delay in vaccine, could that challenge all the basic assumptions for you, for banks, for everybody?
So the position that I've given you just before this question was the situation as it exists today as on date. So if you look at the GST numbers, if you look at the electricity consumption, the pickup in the economy is certainly there. It is visible. How things will pan out, I am not too sure. Post maybe Q3 of FY21. I mean, these are all moving targets. I cannot predict the future. Nobody possibly can. But suffice to say that as I speak, things are not as bad as made out to be.
Great, good to hear that. And I'm hearing it from one of the biggest banks in India, so it's obviously a sense of endorsement and sense of very encouraging. State Bank of India, people are not appreciating that has not raised capital while a lot of other private banks have. There are two ways to look at it. One, you have enough capital, or B, you do not want to raise capital because you think that you don't look at provisioning ratios, or you don't need too much of capital to provide. What is a better way of looking at the fact that when ICICI Bank and Axis Bank and RBL, everybody has raised capital, you've not raised capital?
So capital, you need capital, number one, for growth, or you need it for provisioning. So number one, we are well provisioned currently. I told you the number is in excess of 85%. Number two, you need capital for growth. So given the current growth that we are predicting for the year, which should be between 7 to 10%, as I said earlier, we are well capitalized. At the end of Q1, our capital adequacy ratio was more than 13%. This quarter alone, we have raised in excess of 15,000 crore in AT1 and Tier 2 bonds. In fact, we think that we have in a way rejuvenated the AT1 market. We were able to raise 4,000 crore at 7.74%, if I remember correctly. And I think the growth numbers will be taken care of by the internal accruals. So our operating profit alone during the first quarter was in excess of 18,000 crores. So we are quite comfortable.
Sure. Mr. Bhatia, I want to take a leaf out of your backdrop image and I want to talk about YoNo. A large part of the market, Mr. Bhatia, believes that YoNo is more valuable than the bank itself. What is it that you would have to say to these investors?
I would say that there is tremendous value in the SBI brand, the SBI distribution, the SBI performance, all these three taken together. Certainly, the YoNo platform is currently a little more than 3 years old. A lot is at stake over there. Banking is going to move digital. Currently, we do 91% of our banking digitally, whether it is on YoNo or internet or mobile banking, so on and so forth. This number will move to 100%, I'm sure, in due course, as the penetration improves and people get more smartphones. So our products like pre-approved personal loans, pre-approved business loans, that is something that we are working on right now, will provide us far more visibility, ease of doing business, and convenience to the customer. So we are very positive about the YoNo platform. On a standalone basis, of course, whether it is SBI Life, SBI Card, which are listed, or the unlisted companies like the mutual fund or general insurance, or the other subsidiaries that we have, there is tremendous value out there. YoNo only adds to that.
Absolutely. So which, according to you, Mr. Bhatia, are the subsidiaries in the unlisted universe right now which present the highest value proposition? If you had to number them 1, 2, 3, what would be the top 3 slots?
So two of our subsidiaries are already listed, SBI Life and SBI Card. The other two that will be next in line would possibly be SBI General and SBI Mutual Fund. So both the companies have gained a good market share in the last few years, and they have gained acceptance, responsibility, and markets views them with a certain amount of reverence and regard. We're very happy about that.
Okay. Do you think for next year, credit growth, because of the base effect and because of the shape of the economy, could automatically move to double digit, or I'm being optimistic here?
Certainly, because of the low base, you could move into double digits for sure. So very clearly, the dichotomy is also very obvious. So some of the companies, for them, nothing has changed, whether it is FMCG, durables, technology, pharma. Some sectors are really doing well. And once we have the vaccine successfully tested, which should again happen in the next 4 to 5 years, the growth could actually be phenomenal going forward. So all the negative numbers, the negative 24.5 odd that you saw on the Q1 print, they will, of course, given the economy, the way it is shaping up right now, I'm pretty sure that you'll see double-digit growth also for sure. I have no doubts about that. So autos will do well. Two-wheelers will certainly do well. So leadership, even within the Nifty or the Sensex, we've seen a dramatic shift towards technology, towards digital, towards pharma, so on and so forth. But that's not to say that the other sectors will be laggard. So the leadership will change over time also.
Our closing comments really would be, we'll seek your closing comments on what is your understanding of how much normalization has happened at SME and MSC level. Let's say a month ago, things were A. From A, have they become A plus or have they become AAA? What I'm trying to understand from you, sir, is that SBI, you have a very strong understanding of what is happening on ground. You must have done the data. You must have already gone through what is happening in terms of the demand and activity there. How far are we away from normalization in the lower end of the economy, especially at the MSC and SME level?
So I can only say that the MSMEs and the mid sector this time have been very careful. They've been very prudent. They've been very practical. It's not as if they're running to banks and coming and asking for extra limits. They are certainly conserving cash. That's a very good signal as far as we are concerned. So, I mean, to give a rating like A minus or A, I would still say that they would be close to A.
Okay, Mr. Bhatia, great to have you on the show, and congratulations once again at your new appointment, and we hope to see you more often on ET Now.